Most forex traders lose money exactly when they feel safe trading. Now, this happens to even professionals. Because price is moving doesn't mean it's safe and cool for you to start trading. My name is FX, a forex trader with almost half a decade trading experience, and in today's video, you would understand exactly when it is dangerous to trade, why many people get trapped in such trades, and how to avoid stuff like that. In case you haven't liked or subscribed to the channel already, do that right now. Let's go into the video. Let's start afresh. After the last video, a lot of you guys was asking me if timing matters, when then should we trade. Now, this is an important question I already answered in the last video. In case you haven't seen it, the link to that video is in the description below. But in today's video, we'll dive deeper into this topic because there's something really important, and it's important you understand how it is some of the things I'll be mentioning in this video affect the timing you trade. You see, some of my losses didn't come from a slow market or the wrong market or whatever. It came from the best market scenarios ever. I mean, the London session, the New York session, the same session I advised you guys to trade in the last video. Now the question is, how then did I take losses trading the session? Now here is the answer to that question. You see, when there is liquidity, there is volatility, there is momentum in the market, everybody feels excited, everybody feel cool, they want to trade, they just want to enjoy themselves, make the most out of the market, and probably go home to tell their mother, their father, their girlfriend, whatever, I made profit today. Now that's one thing a lot of us want to do in the forex market, but here is the truth you don't understand. You see, when there is liquidity and there is volatility, best believe traps are being placed in the forex market, and this is done over and over again. Man, it is proven, it's something we all know about. The market doesn't just move because there's liquidity and volatility, or probably because you're right to the direction. Nah, the market moves towards liquidity. That's just it, guys, towards liquidity. And this is why it oftentimes feels like when you've got a perfect breakout, instead of price to continue, it just reverses back. Now this is something a lot of you guys who trade the breakout strategy have experienced a lot of times. This is why a perfect setup oftentimes reverses, and sometimes it feels like bad luck. But here is the truth, it is not bad luck. No one is out there to get you, it is just bad timing. Now here is the mistake most traders make. They confuse volatility for opportunity. You see, without volatility, price would not move. It's just like you're going up to your local market trying to get something, or probably want to sell something, and on getting there you don't find anybody who is willing to do business with you, either the buying or the selling with you. Man, that is just so frustrating, man. Now that is why volatility is important, but make sure you understand that when there is volatility, best believe there is also traps in the forex market, and it's important you take trades with caution. There's one mistake traders make: they rush to click the buy and sell button. Man, it's not about being fast, it's not about rushing, it's not about running, it's about being precise with whatever move you're making. Now best believe you will not be perfect. Now most of the moves you make trading the forex market, even with the right mindset, the right training, the right patience level, you will still end up taking losses, but it will not be as rampant or as often as it would when you don't understand the importance of waiting and not rushing in the forex market. You see, the forex market rewards traders, not the first people who comes into rushing, but those who are patient. The third mistake traders make is this: they do not put their emotions in check before trading. I remember when I first started trading the forex market, and oftentimes when I go into the market to trade and I find that there was liquidity in the market, I just rush in, and I'm always excited because of the money I'm thinking in my mind I was gonna make after the trades. And because of this, I don't in any manner consider my risk appetite. I don't consider whatever, I just go in to trade. And here's one thing that always happened to me: I always get kicked out by the market, losing money, being frustrated, being beaten down, losing confidence. And all of this happens to a lot of you guys because you do not understand how liquidity and timing can work together when it is being contextualized for your own game. The market is just so crazy, and emotions don't always do the trick. Calculations and well-planned risk does the trick. You see, in times like this are when traders get punished. But for the professionals, they don't just trade after the hype and the excitement. the trade, the reaction, after the newbie has been stopped out in the Forex market. You see, everything changed for me when I decided to change my approach towards trading, and then I started asking some better questions. What is price doing at the moment? Where is my liquidity? What is my risk appetite? Am I willing and ready to go into this trade? Now, once these questions have been answered, then I can trade or maybe not trade. And that's it about Forex trading. Best believe it is important you understand some few things about trading. The market doesn't reward the fast fingers. It punishes them greatly, man. It's just too simple. The market only rewards those that are patient. So you want to be patient in the Forex market, making sure your risks are calculated. You see, every business comes with its own risk, right? But it's important your risks are planned and well calculated, so you don't end up losing your hard-earned money to the Forex market and going out sad and in disbelief of what has happened to you, right? Alright guys, this is where we come to the end of today's video. In the next video, we'll be diving deep down into how institutions use liquidity in the Forex market. In case you haven't liked or subscribed yet, please do that right now. My name remains FX. See you in the next video. Bye for now.